What I wanted to talk to you guys about tonight is several topics. One is compound interest. A second is rate of return for various investments that you might make. Performance and set goals, what the historical rates of return are, meeting challenges, the difference between an income trading account and a wealth trading account, mindset, and then to really reinforce the notion that the bus ride can get you forever in a very easy way. So Albert Einstein, which is the second slide, said that compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. So I want to go through on the third slide. If you were guaranteed that you could have the rate of return of the US stock market, the US bond market, these are guaranteed to you. You get them regardless of the US T-bill, US cash, gold, real estate, the next slide, or 1%, $1 a day, $5 a day, $10 a day, $20 a day, $50 a day, or $100 a day. Which one of those, the next slide, would you actually take? And when you look at them, the process that you go through is that there are a number of things that people have always said perform very well, that we're all satisfied in doing. The stock market, for example, everybody says, gosh, if you could have the annual rate of return of the stock market, I'd be rich. And when you look at it, actually, the way that they shake out is that the least performing asset class is US cash, followed by $1 a day, followed by real estate, gold and the US T-bill, US bonds, $5 a day, the US stock market, $10 a day beats everything, $20 a day, $50 a day, and $100 a day beats every other asset class. So if you could just make consistently $10 a day, you would beat every asset class and every manager in the marketplace. So you can skip the next one. And I don't know if the go to 7, see if you click on it, if it will actually progress. And it doesn't. What this slide actually.
It started.
Okay.
It's a slow progression.
Okay. You can see each one of those asset classes. And this is a 1995 to 2023. And you can see all you have to do, not even compounding money to beat the market, is make $20 a day. So when we talk every morning about needing to make 1% or 5% or 20%, all you really got to do is make $20 a day every day. And without compounding, you will beat the market. So on slide 8, I do a comparison of what it is to make $1,200 a year, and that one should also progress if you can click on it. I don't know if it will in this format, but
yeah, I don't progress.
Yeah, you can see at the end of.
Oh, sorry. Now I just messed something up.
You can see that at the end of the period, there you go. The green is simply making $20 a day, never compounding, never do anything. At the end of this period, you would have $42,000. Not anything to write home about, but still better than most people do in the stock market. If you then compounded that, I don't know if you hit the click button, if it won't. Okay, so if you compounded it, you get up into almost 300,000. compared to the stock market at 172, you'll click again, it should give you the total amount compounded for that time period. And that time period actually would have given you almost $300,000. So you can see what happens year by year with the stock market. It goes up, it goes down, it goes up, it goes down. And if you got that, you would still, across that 20-year period, and that's compounded, only be at $100,000. Where if you had simply compounded your $20 a day, you would be at $300,000. Same thing on the next slide. It's really much prettier, guys, if it's in Keynote. So you can see this is gold, and if you watch gold, everybody says you need gold in your portfolio. I've had gold in my portfolio. I've never kept it there because gold does not perform as an asset class in my mind. In a 20-year period, gold is at about 3%. So the next one is compounded, and that's a compounded rate of return. So now I would like to talk to you just about what if I only made $1 a day for, and you should click, only made $1 a day for 250 days. At the end of that period, you'd obviously have $250, which is 2.5%. If you then, and that would outperform US cash, it would outperform your real estate portfolio, it would outperform US T-bills, and it would outperform Intel. So if you decided, well, maybe I could just make $5 a day, and that $5 a day would get you compounded a rate of return of 12.5%, non-compounded, $1,250 at the end of 1 year, and it would outperform T-bonds, gold, commodities, Cisco, IBM, Merck, and 3M. And that's $5 a day. So when we look at trying to grow our trading accounts and grow our wealth, we can start it with very small numbers. A $10 a day gets you an account that will be $2,500 in a year, which is 25%. And again, these are hit the click. This is a non-compounded rate, and it would outperform Disney, Procter & Gamble, JP Morgan, American Express, J&J, Honeywell, Amgen, and Boeing. Okay, most people would say, if I can hold those in my portfolio, I'm golden. Hit the next button. So $20 a day, which is where I want to start. Most people trying to think about would get you at the end of one trading year, $5,000, which is hit the click, which is 50%. And that 50% outperforms Chevron, Travelers, Home Depot, McDonald's, and Microsoft. And that's $20 a day, every day, non-compounded. For most of us, at least as I watch the trading room, most of us are making $50 a day, give or take. So a $50 account, on the next slide, non-compounding, would make you $25,000. I'm sorry, would make you $12,500, which is 125% outperforming across time Caterpillar, Coke, and Nike. $100, which on a $10,000 account is the 1% that we've been talking about, makes $25,000 and beats all but two Dow stocks across time, United Health and Apple. So that's a 1% gain if we could learn to do that. So by way of comparison, you can see across time on the next slide, maybe. A $10,000 account in 1995 would have total returns. You can see $1 beats Intel, $5 beats Cisco, IBM, Merck, and 3M. $10 beats Disney, Procter & Gamble, JP Morgan, American Express, J&J, Honeywell, Amgen, and Boeing. Chevron, Travelers, Home Depot, McDonald's, Microsoft is worse than $20 a day. Caterpillar, Coke, and Nike is worse than $50 a day. If we hit that 1%, we only fall to Apple and United Health. If you click again, Apple will come up. Apple, by the way, is about 14,000%. So on the next chart, I'd simply give you a way if you wanted to go out and look at any stock that you pick. That will give you a $10,000 investment beginning in January of 1995. And with that, you can go and look at anything. So I'd like to take one step back. Remember, I said compounded interest is the eighth wonder of the world. On the next slide, we're going to look at compounding interest for 250 days. Why don't you go to the next slide? Maybe there's an extra one in there. This is the historical returns for the $20 a day. If you had just made that starting with $10,000 at the end of that time, again, no compounding, you'd be at $150. The next one is the $50, same thing. And at the end of the period, you would be close to $400,000, again, non-compounded. You know, and I guess the reason that I'm going over these so many times is that I hear so many people taking the stress in trading and coming back. So a 0.5% a day doubles in 139 days and triples in 221 days. That's 0.5% a day on a $10,000 account. 1%, which is what we're all shooting for as we post, doubles at day 72, triples at 113, quadruples at 143, 164, 183, 198, 211, 223, 243, and at 250 days, you're at 120,000, which is 120%. That's 1% compounded. So I'm trying to say to people, don't stress on not hitting the numbers. Duke, I applaud you for the numbers you hit, but I think I hear a lot of people are very stressed trying to follow that. I know that a lot of people in here are on Beeline. So the Beeline, this process would get you through the Beeline. I started like everybody else with a $1,000 funded Beeline account, which should be the next slide. I currently trade $40,000 in my funded account, and that gets me the return of 80% of the account. So it's slow, but it gets me a check all of the time. And when we look at that, Sean always talks about the average daily income. You'll have to hit the click because it's scheduled to go through in clicks. Those are the account numbers. The Beeline account we do have to pay for when it's funded. I think it's $65 a month, but even at $20 a day, you can pay that $6,500, that $65 a month and still get your payout and move along the line. The next slide actually goes through and says how rapidly you could build your Beeline account. And in 18 months, you could move from base funding to $50,000, get a total profit sharing in 18 months of $51,000, and in your first year have a return of $7,900, which in my evaluation of it is better than most people would do in the prop firm accounts that they're trying to trade. I know there's been a lot of discussion with people about the growth account. So, and I was listening to Sean before I came on, he was talking about the infinity. So I don't know if he's really going to cancel the growth account or not. I think there's been some discussion about it, but the Beeline, as far as I can tell, and the affinity accounts are both going to stay, hit the click. So the profit in the Beeline is every 90 days. There's some discussion in some of the rooms about it going to every 2 months as opposed to every 3 months. But you can pass through the Beeline simply with this $20 or $50 strategy and being consistent every day. So the growth account, if you click through that one, is, and I don't know how many people in this room are in the growth account. I think there's a lot of frustration because a lot of people will get, to 9.5% and it all goes away and you reset. And if you do that 3 times, it goes back a level. So I know that there's been a lot of frustration in a lot of the sessions that I've been in. People have complained about that. I'm right now at the $10,000 level, but I've been reset 3 times. So it is frustrating, and I think Sean's trying to do something about that. I think the bottom line of what I'm trying to say is that if you're trying to achieve financial security, it's on the next slide, a combination of both wealth and income. So the way I built mine was I started with an account at 10,000, and when I doubled that account, I took 10,000 out of it and put it in a tax deferred account, an IRA. I was still making a small enough salary at that point in time. You'll have to hit click. I was making small enough salary at that point in time that I can still contribute to a Roth. You'll have to click through this one. And that Roth account, again, started at $10,000. My Roth account is now worth almost $2 million. It is tax-free, so I put everything I can in that. So I took that, leveraged it to real estate, leveraged it to commodities in a Roth. So on the next slide, what I'm suggesting is that with a very slow bus ride and 2 accounts, an income account and a wealth account, click it, you can actually go through and make the money. So here's the power of $20 a day. And I know Dave's been talking about the power of $20 a day, that not compounded, no withdrawals, allows you to grow 10,000 to 15,000. And this is in a wealth account. This would be an IRA. This would be a real estate account, something that you weren't depending on going through. So if you click through that, and I apologize, guys, I should have figured out that ahead of time. My problem. So in your income account, this one talks about taking money out every time. So every month, reset it to 10,000, take the money out. And at the end of it, you will have $16,795 in profit sharing. Okay, and that's again just with $20 a day in a $10,000 Beeline account. The next one again is the 0.2% per day, and that account, as it grows through, again, the reason it's flickering like that is I'm taking the money out, and at the end of 1 year, you could increase to $100,000. I have not done that. I haven't been doing it long enough to do it. I'm hopeful of doing it, but the profit sharing would be $42,000, which meets that magic number that's on the front of the Trader on the Street of $170 a day, which is the average annual replacement income for the US. The question then is, how do you grow from, in the next two slides, if you click through them, how do you grow from $10,000 to $1 million? And across a period on the next one, you can see it grow. And this is simply with 0.2% a day, the growth across a 10-year period. I guess, Josh, this is for you. I too always reset and trade an account at $10,000 and copy that $10,000 account because I get really antsy when I'm supposed to be making $2,600 every day. So the next slide kind of is for you, Josh. I added it. So if you take, and that reaches $1.3 million, okay, 10,000 to 1 million. And on the next slide, you can see that I'm breaking it up into an account. Every time I open that account, if you'll click, it should come up to the next one.
Sorry, Debbie, I am clicking, but it's not clicking through.
Okay. The next one actually goes through and resets. It makes 10,000, about $12,000. See if you can, yeah, click down one more slide.
Let me try one more time. Yeah, it's pretty much stuck and isn't going. Sorry about that.
Can you, is there a thumbnail so you could skip the next slide?
Josh broke it. Yep. Kerr said Josh broke it because it's his slide. It's his slide. It's his
This
fault.
is the story of my life, right here.
Okay, let me see. Okay, now we're back. What slide are we on, Debbie?
Yeah.
What number?
It's 34, I think.
Okay, let's try this.
I think. Is that it?
Yeah, 34.
All right, so yeah, and start the presentation.
Yeah, so Josh, I promised that the other one simply reset every time the 10,000 got to be $20,000, it opened a new account. Okay, so at the end of the period, there were 6 different accounts. It makes about $13,000 less across the time period, but it essentially does the same thing, only copying from something that's comfortable. And it really resonated with me this morning when you said that, because that's what I do. You know, trying to see it go up and down by $2,000, $3,000, $4,000 at a time, like Sean does, scares me to death. So I don't do that. So the next series of slides simply say, could you do this? You know, could you trade a 1-minute chart for 2 hours a day? Could you make $20 a day? In this one chart, this 2-hour period, the range was 16 pips. It would take 100 trades at 0.01. It would take 10 trades at 0.1 and 1 trade at 1 to make your $20 a day. So the next chart actually shows you the cycle of where you could do that. And there are several in the same time frame. There are several places that you could have made those. So you can see, and all we're looking for in this chart is that 2-pip movement for a number of trades. And that makes the $20 a day. So completely doable. I know there are a number of people in here who are a little bit longer term traders. And that longer term trader, I did the same simulation on our chart. So could you make 1% a week on an hour chart? And for this chart, there was 121 pip range. And if you traded a size of 0.01, taking 2 pips, you'd need 1,000 trades. 0.1, taking 2 pips, you'd need 100 trades. Trading a full lot, taking 2 pips, you'd need 10 trades. So as you go through, I'm trying to say there are a lot of ways to skin this cat, but the cat is $20. So on the 10 pip take profit, which a lot of the people say, I don't want to wait for that, but on the 10 pip take profit, they're in a 1 hour chart, had a 91 pip consolidation range across the week. There were 2 high probability 10 pip trades, and it would have made your $100 for the week. I know a lot of people trade with Rex that are in this group. So I also did a 4 hour chart and a 1 month duration. And in the 1 month duration, you need to make $500, which is 0.5%. The month range was 472 pips. And again, you know, I think in a month, nobody's going to make 5,000 trades, but we clearly would make 50 trades or 500 trades, so that to make that $500 for the month, which is $20 a day, could you do it? So why do most people fail to do this? And I think the very simple answer is large drawdowns. You know, we're swinging, you know, if I were to use the baseball analogy, we have front row seats for the San Francisco Giants, and they've been winning this year with home runs. Swinging for the fences doesn't get you where you need to go generally. So the simple answer is large drawdowns and a lack of consistency. So to put it in perspective, 1% daily return compounds to 130% annual return. What can I say? If we could each achieve that, we would blow the market away. The return is significantly higher than the average stock market, and historically, significantly higher than to 7 to 10% inflation. So 2 of the most deceiving statements in trading, I believe, are you need to risk more to make more. I think you need to risk less to make less, and risk a lot to make a lot. Again, I think make a lot, risk less. So risking a small amount on each trade is more likely to produce big returns. Once you can internalize that, you need to look at entry points, which we do every morning, stop loss and profit targets, trade within risk levels. My risk level, which is what Dave asked me to talk about, is 0.5. I set my target. I think small. I cap my trade and account risk, and then I set reasonable targets. My reasonable target right now, I shoot for $100 a day in every account I trade. And right now I'm trading 4 accounts. So the big question is, what's putting pressure on you for not making money? You know, are you putting that pressure on? If you are, my suggestion is to take a step back, try and reduce the anxiety level, which for me is $100, but I had to work up to that in the Forex market. It's much higher in other markets that I've been trading longer, but that allows me to keep my mind clear. So why is it stress? The need to make money, obviously. The stress to make money. Everybody's saying, how much did you make? What's your percentage? Is for many people the reason they can't make any money. I'm not saying that that shouldn't be our goal. It obviously should be our goal, but it should be our goal in a stress-free situation, just like going to work every morning. You get up, you get dressed, you go to work. So if the pressure to make money is holding you back, my suggestion is that you consider, if you are requiring yourself to make money, then you have to accept, it's on the next slide, you have to accept the negative energy that comes with that requirement. You know, that requirement, that negative energy, I think, in watching us trade every morning causes people to make mistakes and trade scared, and it leads to poor results. So for me, in my trading history, consistency was the key. So in the beginning, my suggestion for the new people particularly is that keep your day job until you've gone through a process that allows you to take care of your day job, whatever that brings in. So keep your day job, allocate some funds to a trading account. I started, like I said, with $10,000. Sean offers us the ability to work through and trade his $10,000. I'm a big proponent of the Beeline for that reason. But there are other ways to get that $10,000. Once you start trading your own money, it will be very different than trading somebody else's money. Trade longer term with lower risk and smaller drawdowns. And once you can do that, you can trade more comfortably, leading to better decisions and positive results. So I would like to propose my challenge. And my challenge is a consistency challenge. Invest in yourself, invest in trading, open a $10,000 account. $5 a day gives you $100 total return, $10 a day, $200 total return, $20, $400 total return, 50 is $1,000, and 100 is $2,000. That generates $3,700 in a 20-week period, which is a 37% return. What my suggestion is, and the way I did it was I traded that level until I was comfortable with it and took a step up to the next level. And if I started losing, I went back a level until I was consistently making that amount of money every day for a 4-week period. So that's what my challenge is can you make the 37% in a 5-week period by moving from $5 a day to $100 a day in a 4-week increment. So we could stop the next or just kind of me pontificating, but the last slide is the fun slide. Enjoy the bus ride, guys. $10,000 can very easily become $1.3 million. 9 years and 13 weeks. So that's mine, and I'm going to take a sip of scotch.
I love it. So I actually love that you're kind of in I'm trying to find the words like harmony or synonymous with what we've been talking about lately. We kind of shifted gears a little bit so that we are now, instead of going for 1% in one account, going for that 0.25%, right? And, with your $20 a day, it's the same thing. I kind of been talking about going for that 0.25%, which is, $25, but it's the same concept, same principle. Right?
Exactly.
It's the same principle of going for that 0.25%. And as we witnessed today with Josh trading, he hit that 0.25% in 30 minutes, but he wasn't satisfied. So he wanted to hit that 0.25% in like 80 minutes. So instead of hitting it at 30, he decided to hit it in 80 minutes because he wasn't happy with it.
But he worked hard.
But he worked hard. Exactly. Right. Now the only thing I'll say is I love that challenge that you put out for 10K. If you don't have 10K to risk in the market, how would you propose that somebody gets started if they don't have it? Now, I know that you mentioned there's Beeline out there. I guess there's other avenues to do that with, but what vehicle would you say is better from a learning perspective? Would you say the vehicle is to go out there and get a prop firm, or take $1,000 of your own money and do $20 a day? Do you know what I mean?
Yeah,
Like
no.
which vehicle would you rather, would you say is going to be more powerful for that individual?
I think more powerful for the individual, the first time out would be to go to get a prop firm. I'm a big proponent of using somebody else's money. But
agree with that.
before I did that, I would go out to a simulated account that didn't do anything, and I'd go through that 5-month process. Now, if you can, you'll see very quickly where your limit is. If $25 a day is hard, practice it until you get it. I'm suggesting that if you can do it 20 days in a row, then it will be easy for you. But I'm a big proponent of actually doing it. And then I would open 2 accounts, one that I pay for with a prop firm of however much I have to pay for it, and my own $1,000 account. And I pick a prop firm, and there are a number of them out there that have no time limits on it. And I would use my personal $1,000 account and trade it at a level and let it copy to the $10,000 account.
Hey,
No.
you're just echoing everything that I've been saying. So I appreciate it, Debbie, but I'm not, it's great to hear it from another voice. Right. And that's like, I've been hammering this home, Forex, your Forex, right? Saying that a lot. And it's not, and the thing that I was worried about in the beginning is you hit the nail on the head, is that most traders are going to fail. Why are they going to fail? It's because they're going for home runs. They're going for home runs. We don't need to go for home runs. And your presentation was the perfect time, the perfect cement to kind of reinforce that the bus route is a great way to go, right? And consistency. I don't really want to call it the bus route. It's consistency, right? It is consistency. And I'm just going to throw this out there for you guys. I have just so I can find the chat here. Meeting controls, where are you? Oh, you're on that monitor. So I'm going to throw this out there for you guys. If you guys don't have yeah, I like it. I just saw Kovash for president. He's not even on here. We can't give him props. This right here is a prop firm that I've vetted, that I've used. That's my affiliate link. You guys are welcome to use that.
We don't see it, David.
I just put it in the chat right
Oh.
there. So I just put it in the chat. It's for Funded Next. They have it's a good program. They don't have any time models that are anything like that. And they just reduced their pricing. So you could start out with that for a $15,000 account for like $100 or something like that. So it's a great way to get your feet wet, but I'm kind of echoing Debbie a little bit, that if you've never ever traded your own money, you need to. And what I would highly, highly recommend is going for the 0.25%, the $25 a day in the prop firm account. Take that money and open up your own account and copy trade into that. You will trade your own account so much differently than you're going to trade any other account out there. And it is a psychological difference that you need to overcome from pure psychology. And if you haven't done it, then start small. And I love what Debbie and Josh are talking about, is that if you need to trade with the small account, because I'm kind of that way as well. Like I like to trade with a $50,000 account personally into my larger, anything that's over 100K. I'll trade the $50,000 account. Because I'm used to that, I'm comfortable with that, and I know what that yields me, right?
But
So-
even if you started, Dave, with $1,000 account,
Yep.
across 80 days, that account would be worth $1,215. Okay, that's at 0.25. So the first day you need to make $2.50. That's the way to learn to do it.
Yeah.
Just logging it through, and you might say, well, it's not worth my time to do $2.50, but it is. Across a year, you will then be able to leverage up. So with your own money, there's no obligation to take any of the money out. You can let it compound, you can let it grow, and it will not take you that long to get to an account size. And if you're prop trading, when I started buying houses, the first, well, I won't go to the first, but I bought 7 houses in Houston. And because I had grown my Charles Schwab account so much, I put 5% down on those houses and my tenants paid for them. Okay, I'm a big proponent of somebody else's money, but it has to be judicious and you need your own money. You need a stake in the game.
You
If
do.
you don't have anything in the game, then it's easy to say, well, this isn't my money and all I've lost is my $100 for doing this for the month. And you've lost a lot more than that. You've lost the time to learn. So I'm a big proponent of beg, borrow, steal $1,000 because that stake in the game will make you think differently.
100% agree with that. Hands down, I agree with that. Right. So I love your presentation. I can't say that I'm just like it. The timing is perfect, right? I've been spending this whole week building out working models to prove this out and to teach you guys how to Forex your Forex, right? With taking the 0.25% and hitting that every single day. And I'm having a lot of fun doing it. And I just like, I'm reinventing like my trading all over again. And because I've really come to embrace this methodology of just getting in, getting out, and getting done reduces your risk, reduces your exposure to the market, and it reduces and it just is consistent. It's so easy to be consistent when you're not swinging for the fences, when you're just going for base hits, like we always call it. Now, that's hard to do. Oh, I guess Kovash is here. I don't think he saw nobody vote for him though. Nobody vote for him. But go ahead, Debbie.
That's the question that I wanted to address. The
Yeah.
way that I learned to limit my risk was to start at a level that I knew I could make every day. Everybody talks a lot about being a good loser. I started where you couldn't be a good loser, and I ran an R&D department that was quality driven in a hospital where losing is somebody's life. So losing to me is not a possibility. So I started in Forex, literally looking at making $5 a day. And once I made that, so the trade size was small, and all I was looking was to find those high probability trades and make as few of them as I needed to make to do it. So on my funded account, I'm like at 99% wins. Okay, I hate to lose, and it's because I learned to trade options where there were ways not to lose, but I don't lose because I started small and I got to where I was comfortable. So I got to where I looked at a trade and I said, okay, I'm pretty comfortable that this trade is going to win. And I enter one trade, and if it goes against me, I enter 2 trades. And if it goes against me, I enter 3 trades. But the vast majority of time, it goes in my favor, and I take what I'm going to get. And then I do what Dave's been preaching: get out of the market, go to another account. That's why I'm trading 4 different accounts. But I also have 7 stock accounts that I trade. So once I've made my goal in my account, I simply close down and go do something else. So Nick, I hope that answers the question.
I'm gonna ask you this question from Megan. So Megan asks, so what if you have a bad day? How do you recover from drawdowns with only $25? Let's say you lose $500 in a day. What would be your answer to how to recover from that? Would you just go back to $25 a day and it just knocks you back on time? And not worry about the loss?
First of all, I try never to get into a place where I'm gonna lose, even in my $40,000 funded account. I try not to ever get to the place that I lose 500, because in that account, my goal is 500. I make more than my goal is 100. I make more than 100 most of the time, but I set myself at, what if I lose 500? It takes me 5 days. So I don't set that. I set it at something less than that. And if I see it approaching and I don't think I can work my way out, I simply take my $100 loss so that the next day I'm back at that day. So it's really cutting your risk when you see you've made a bad decision. You know, I've watched, I think we've all watched Sean go 10%, 15%, 20% down in a day. I can't do that. My personality will not let me do that. So I simply don't do it.
I would agree with that. With this model, the bus route model, you have to have strict risk parameters. You have to get out, right? You just have to get out when you hit your risk limits, get out. You know, whatever that is. If you're going for 100, you know, I love to default back to never risk more in one day that you can't make up in two. And that's generally a good way to run it, right? So if you're going for $100 a day and you're down 200, you're done trading for the day, and just come back at it tomorrow, right?
Go to another account. That's the
right?
reason for having different accounts is cut your losses, stop, and I'll get up and I'll go for a run. I'll go get on my elliptical. I'll go do something to reset and then come back. But stop, take a deep breath, go do something else and come back to a different account. I think the hardest thing for me, and when I first started trading Forex and started trading with the Beeline, is I said, Sean's an expert. I want to be Sean. I'm not Sean. I don't have Sean's personality. My thought process is different. I'm a trend trader, not a counter trend trader. And I became a trend trader because that's all you could do when I started doing it. So I tried to be a counter trend trader and I'm not one. No, so I took a step back and said, be who you are, be true to yourself, and remember that you got to where you are. You know, I literally put myself through all 5 degrees. I paid for my own college. I worked through it. And there were days that we had $5 left at the end of the month. So I've been where I think most people are in this. And it's slow and steady, but it got me where I am, which is reasonably well off.
I love it. I really do love it, Debbie. Thank you so much for the time that you spent putting into your presentation. Very well thought out, very well presented. If you guys are not convinced that 0.25% or $25 a day is the way to go, but I mean, now after the presentation, there's just no hope for you. You can retire now. You're never no, just kidding. I think there's power in what is being talked about tonight, and hopefully you guys have had some aha moments during this presentation, and find that you don't need to swing for the fences, right? And so that's kind of why we switched it up. Instead of going for a 1% return in your account, go for a 0.25% return and times that by 4 equals the 1%. That's what I'm doing to help you guys to kind of move the needle right in your account. So hopefully you can see the value of that, the value in everything that we're doing to help you to become a better trader. And Debbie, thank you so much.
The only thing, Dave, that I would say other than that is if a 0.25% is hard, don't go for it. Go for something less.
What's easy, right?
Eat it. And then once you're comfortable at that, you know, I'm a child psychologist by profession. When a child learns to walk, they have to get on their belly and creep first. Then they have to stand up. Then they have to hold somebody's fingers to walk. And I have a grandnephew who just took his first step. Then he gets to take his steps. We learn by little increments and steps. And I think so much of the training that we've been doing says, nope, you got to go from being flat on your belly to running, and you can't get there. So if a quarter of a point is too much, and I've heard people say that, I usually go, I can't make more than a tenth. Do a tenth for 4 weeks, then
Yeah.
try 0.15, then try 0.25. You know, it may sound slow, but I can guarantee across the next 3 to 4 to 5 months, you will move from the 0.1% to the 0.25%, and you'll be comfortable with it. And I think that's the real goal. Is I hear so many people who say, I'm just not comfortable yet.
I agree, 100%, hands down. And go for what you're comfortable with, and that's the thing, right? Go for what you're comfortable with, and if that doesn't move the needle, do it for long enough until you can get good enough to where you can move the needle, right? And so I get it. There's psychology, and nobody wants to make $2.50. That just doesn't move the needle for people. But it's the skill set that you need to you need to grab that skill set that says that you can do it daily. There's so much more power in being able to have 20 days in a row that you're winning, that were successful, that you won, that you're winning 20 days in a row. There's a ton of power in that. And if even that's $2.50, you still had a positive day. 20 positive days in a row is an immense power. And once you can get there, you can increase your sizes. Go ahead, Debbie. Sorry.
Link your small account to a much larger simulated account.
Yep.
So that you're in your mind, yes, you're working on that smaller account, but in your mind, you say, if I can figure this out, the 0.25% on a $100,000 account is the money I need to retire. Is the money I need to stop working. So I think it's the combination of getting comfortable with that lower thing and then understanding that it will multiply on bigger accounts.
I agree. And while it's still really cool and awesome to see other people post that they're killing it, and I love that, I love showing that, and I love calling it out, don't let that demoralize you if you're not hitting that. Just make that a challenge, that consistency is your challenge, not huge returns, right? And I think that if you do that, you'll find success. So
Hey, Debbie.
Yes, sir.
I have 2 questions if you have a second.
Absolutely.
Can you describe how much power the comfort of $5 a day, 10, 20, as you kind of outlined in your challenge, gave you? Like, and how did it manifest in your trading?
When I first was funded, our first funding is $1,000 account. When I was first funded on the line, you go from where you've been trading $10,000 and all of a sudden, wham, it's $1,000. I blew it up. I mean, I totally blew it up. And it took me a while to make it back. And it's because I didn't, all of the things that the Beeline had taught me was to swing for triples and home runs. And what I know to do, I stepped back and I started with that $1,000 account, and I made it back to get Ron to fund me more on $5. And I did it until I was even on that account. And then I went to 25 and I said, okay, now I'm going to work on $10 a day. Okay. And when I got 5,000, I said, okay, now I'm going to work on $20 a day. So mine was longer than that 4 to 5 weeks, but it was based on the account size that Ron was giving me.
Okay, so at the $5 a day start,
Yep.
can I ask you maybe where you are now and how long it took you with the process you outlined in your challenge? And not like where you are a day now. If you started
My funded account right now is 40 grand. Okay. And I normally will make 1% a day. I don't post it because it to me is antithetical to who I am, but I'll normally make more than 1% a day. But I do that in my lot size right now. I trade 0.1, even in a $40,000 account, and I go for 5 pips. So I go for $5 a trade.
And about how long did that take?
To get to 40,000 in the beeline, it took me from when I first was funded, I think I'm 18 months into the process. And each one of my funding levels has been $2,500. I mean, other people talk about getting bigger bumps from Ron. I've never gotten more than, that's not true. I've gotten two $5,000 bumps from Ron. Normally the bumps I get are 2,500.
But if what I'm hearing, if I can echo it back, it's the power of the consistency and the confidence in, I made $5 a day for 4 weeks. Okay, I got this. Now I'm going to do 10 for 4 weeks. Okay, I got this. Now I'm going to do 20. Oh, I didn't get that. I'm going to go back to 10. Now I go back to 20. When I get 10.
I don't go back to 10. I didn't go back to 10. I kept it to 20 until I was comfortable at 20. I
So
didn't
you
move
keep doing
forward.
it.
I didn't go backwards. I didn't move forward, which is what I don't like about the growth account. Is I don't like moving backwards. Give me a goal and let me work to meet that goal. As opposed to right now on the, and I haven't gone backwards yet on the growth account. I might, but I haven't. I don't like the idea of if you miss 7,500 3 times, you go back to 5,000. I don't like that. I haven't gone backwards, but I don't like that concept. So once I hit a level and I'm comfortable, I don't normally go, well, I've never gone back to it. You know, I just keep striving at the $20 and trying to figure out. And what that does is it forces me to look at high probability trades in that account. And I do trade a simulated account in the Beeline at a smaller level. I wish the Beeline let you copy trades, because I'd like to be able to trade something smaller than 40,000 and copy it. That's my mindset. But my goal is, and there are days I make 5, 6, 7%, but I still trade 0.1, and my initial target is $5. If I get $3 up, I protect it. And then at that point in time, I move my take profit to the next resistance level. If I'm bullish, if I'm bearish, I move it to the next support level. So I may move it 20 pips out and let it ride. So I do get some rides, but that's how I do it. 0.1, $5 initial.
Okay, and on your risk side, you don't go past a half. And if you get negative half drawdown, you take it, go take a break, go to another, come back, but go to a different account.
Correct.
And it's holding to that 0.5% that keeps your loss days small and minimal.
Right. Correct.
So you're always making profit. Even if it's
I'm always looking to, if I can see my equity curve building, I'll be up in a minute. If I can see my equity curve building, I'm golden.
okay. Thank you. This was gold. Thank you.
So
What
just vote for me so I can get the $10,000 funded account and I'll have 5. I'm teasing.
So Josh, what's your big takeaway here? That's to you, Josh.
It's kind of, I'm going to watch this like again and a couple more times. It's kind of what I was just on the brink of discovering in the last 3 weeks, like what I've done with my risk. I've quit risking out. I've quit going 2 or 3 or 4% in the hole just to gain 1% or 0.5% or 2%. Because in the spring, for some reason, I was meshing really well. I was averaging 2% a day, and I was like, oh, I got this figured out, right? Summer hit, season changed, and whatever my eyeball saw, it no longer saw. So I was taking a lot of 10% hits and I was taking a lot of hits, and a lot of it due on the psychology side. And 3 weeks ago, Kevin gave me a pointer about figuring out your risk, ideal risk, and your ideal profit. And I've done that. And in the last 3 weeks or so, I average around 1% a day, and I average around 1.3% loss when I take a loss. So that's within a 2-day recovery. And I'm still trying to clean that up a bit. Like I've just been doing this the last 3 weeks. But what I've seen in the last 3 weeks, that when I take a loss and I just do my normal trading and I'm going for, I think I'm still going for like 1%, but I haven't gotten it but like once. I got like 2%. I had a 2% day and the rest were 0.8, 0.9, 0.7. And then like yesterday was like 0.3, right? But I've quit bleeding the account by controlling that. The account's actually growing. Like it's up 1.5% total. So what Debbie's talking about tonight and what I started figuring out this morning was about being comfortable. So I've toned back to find where I'm comfortable, and I'm going to do that for a month, and then I'm going to go up a level. And if I'm comfortable after a month at that level, like what Debbie's talking about, because she basically just gave me a time frame for she gave me a time scale on how to do this. And so I really appreciate tonight.
Awesome. I'm glad that you had your aha moment, and I'm so thankful that Debbie was able to be on here and share that with everybody. So if the big takeaway, if you guys don't take away anything else, just take away that you can make money within the scope of your own resources. You don't need to draw on somebody else's successes. Find the way to make it work for you. And that's the biggest thing that I would say to take away from here, is to make it work for you. Right. Anything else you want to, any last questions, anything else, anybody else want to share anything or anything like that?
Are you taking students, Debbie?
I would be more than happy to communicate with any of you guys. I taught options trading for a long time. I do believe in paying forward. I don't need to make anything from anybody. It's a reward, as David said, it's a reward to pay back and pay forward. So I'm happy to talk to anybody at any point.
That just will take a little while to accept a friend request.
I don't accept friend requests.
Hey, I've got good scotch. I'll mail it to you.
11, 12 is great.
Yeah.
I'm using, so.
How did you learn about the apiary farm?
I'm sorry, say it again.
How did you learn about apiary?
I don't really know. I get calls all the time asking me if I will trade for people, and I don't do that. And somebody said, well, have you looked at this? And I was helping somebody and somebody sent it to me. And I said, well, that sounds like fun. So I started. And I got to a key line very quickly because, again, I did it wrong. I went through and I took all the tests. And then I went back and went through the courses. That's not the way you're supposed to do it. That's the way I did it. And I got through it very quickly, but I very quickly learned that unless you can perform, it doesn't matter how much you know. So that's when I started with the $1,000. I blew it up pretty quickly. And when I say I blew it up, I dropped it to like $850. So I didn't blow it up, but at $5 a day, it took me a while to get it back. And I, at that point in time, said, okay, now learn to apply. And again, I've got 5 degrees. I'm an academician, learn to apply what I know. And I wasn't doing that. And I told Sean the first time that I went to a boot camp that I thought that we kind of got dropped off. You finish the beeline, you get funded, and then there's nothing. There's nobody to talk to. There are no challenges. There's nothing to learn. You're just kind of there. And then they put out the 3 challenges, the Benjamin, and there were 3 of them. And I said, okay, well, that's helpful because it gives me a framework. But again, we kind of got, in my opinion, you finish the beeline and you're kind of dropped. There's nothing else to do. So you're on your own at that point in time. And that's when, I met Dave. I did the wobble camp. I met Dave. we started talking. I went to some boot camp, and that's when you just started discourse. So I started discourse, and I found that the community, when it was talking, was much stronger than simply going through the academic online courses. So I don't really know how I found Sean.
It's
I was at
probably
the
from my
first-
email.
It was from Dave's friend request. He said, gosh, have you ever heard of the apiary? No.
No, I probably sent you an email because that's what I do. That's
And he said, you want to buy crypto?
yeah, no, I ran all of apiaries marketing from 2011 to 2000 to COVID. So
Right.
I probably hit you up on that. But no, I appreciate it. And so
I take away from this is that you've got to be patient.
got to be patient.
So
That's a
if
good
you're-
takeaway. That's a
yeah.
great takeaway.
If you're going for the 0.25 and you don't make it, you make 0.2, then you know, you can just be satisfied and change the account. Because
I-
sometimes
If I'm at 0.24, I change accounts. I learned the hard way that trying to get that last trade in absolutely killed me.
it's true. It's true because the other day, I think it was Tuesday, I was at 0.97. I said, I need to get this 0.03, and it took me a while.
Yeah, it happened 2 days in a row in our trade room. Duke and Josh take the last trade to get there. Yeah, Josh's trade took an extra hour though.
That's because I was in education mode.
Oh, is that what that was?
Yeah, we're gonna go with it.
And so I just
$20
waited.
in the last half hour. Congratulations, Duke.
Market is so slow though.
Well, Debbie, appreciate your time. Sounds
Yeah.
like you've reinforced the bus route. That's all Nick Kovash wanted to hear is that he's worth it, and he's smart enough and good enough, and doggone it, people like him. So pick yourself up there, Nick. You've just been validated. Your whole life has come to this moment. So
Thanks, Debbie.
and Duke feels
Appreciate
like internal conflict right now.
I still prefer the car.
But no, I think when you're trading, the community can help you a ton, but it can also pull you back if you try to be somebody that you're not, right? So just find your own trading style, find your own methodology, and that's what that's the best thing that you could do, right? I think.
Hey, there's that bus with the rocket propellers in the back. That's probably my bus.
But it's your bus. I mean, that's the point. It's Duke's bus and it works for Duke. It just
Yeah,
doesn't-
exactly.
Yeah.
Well, any last questions before we let everybody go?
Very much thank you, Debbie.
You're welcome.
May-
And
may I ask
thanks,
a
Debbie.
question?
Yeah, for sure.
Great. Hi, I'm Kyla's daughter.
Put it on.
Great. I'm Kyla's daughter. So he invited me because I do options trading, and he wanted me to come listen to you, Debbie. My question to you is, as you've learned these new trading methodologies, investment methodologies, how do you reset to learn from scratch? To like, what are some advice you would give to someone like me who has no experience with real estate or Forex, and I don't want my kind of old learning to sabotage, new learning? What would you recommend? Thanks.
The first thing I think I would recommend is to recognize that markets are the same. They move from expansion to consolidation to contraction to expansion, and that happens in any market, whether you're buying houses, whether you're doing commodities, if you're doing options, The strategies, for example, I sell naked puts and options, very risky, very leveraged. I trade a triple leverage ETF. I sell puts on it. Really risky, really leveraged, but it's because I can read a market. So markets are the same, they move in the same direction. And I think a lot of times we come back and we think that what we've learned doesn't apply to a different market. It does. So the first thing I'd say is, what did I learn in trading options, and can I apply it to the new market that I'm looking at? Leverage is important to me. Using other people's money is important to me. So those things carry from market to market to market to market. So I wouldn't throw out everything that you've learned. I'd take the things that are generic to markets and then find out the things that I need to learn in Forex that are different, and they are different. In an option strategy, you can correct a bad trade. If I sell a naked put on something and it goes against me, I simply roll it out and roll it down. You can't do that in Forex. So, but the market moves in the same way. So I would try and find the things that are consistent across markets and keep those, and then find the things that are unique to the Forex market and learn that. Does that help?
Yes, thank you very much.
Great question. Appreciate the question. All right. Anybody else? This is the last chance. You're going to get Debbie in person.
This is the only time you'll see me on camera. I don't normally turn my camera on.
Yeah, dude, support, resistance, price cycles, consistent across all markets for sure. All right, guys. At that, I'm glad we let it run a little longer. Glad we could get your presentation up and going. I'm glad that everybody was here to hear it. And for those tomorrow who didn't make it, they're going to definitely need to watch the recording of this. So that recording should be up here in a couple hours, and you guys can log into the website to view that, or on Discord as well. It should be posted there. So all right, guys, at that, I think we'll call it, and we will see you guys in the morning. If you guys on the hot seaters want to be night owls and want to trade with me, I'm still trading. I need the market to move probably another 2 pips and I'm done trading for the day. So if it does, great. So thank you guys, and we will see you guys in the morning.
Thanks, guys.
Thank you.